One more example on variable and fixed costs. And in this video, we're going to focus only on variable costs. Here, we are given an information about a company which has relevant range of production of 10,000 and 25,000 units. And the information in the table right here is about 15,000 units of production. So what they have done is they have given us average cost per unit. So they've calculated and given to us. And but this is all about 15,000 units of production. So first, before we move into it, let's understand which of these costs are variable costs and which are the fixed costs, and we need to deal with each separately. So the direct materials, we know that the more you produce of output, the more you will use materials. So that's going to be our variable cost. And again, let me just draw a graph right here. So the output is here, and this is our cost. And so the more of the output you have, the cost will be higher. Yeah. So this is very simplistic view of that. The same goes for the direct labor as well. So the higher the output, the more of the labor hours you will have to use, and therefore more you will have to pay for it. Indirect materials are also variable costs. Fixed manufacturing, as the name suggests, it's fixed. Variable manufacturing overhead is variable cost. So the more you output, the more you use overhead costs. And variable selling and sales commissions will be also variable. Now, because this provides us per unit, one thing to remind you is that so if this is the total cost, the per unit basis in terms of the variable, so this is all about variable, is going to stay constant. So if you have one, let's say, t-shirt that you're producing, the variable cost per unit is going to stay the same. So if material labor is $10 together plus variable manufacturing overhead is $10, that's going to be the same for the next t-shirt, second t-shirt that you are producing. So $10, $10, $10, $10. So the per unit is going to be fixed or constant. So I hope that's somewhat understandable. And let's take a look at the examples that we have right here. So with the first one, we have if 10,000 units are produced, what is the variable cost per unit? And so all we have to do here, and the question is about produced items, we will just add up all of the variable costs that are relevant for production. So we have here direct material, $12, direct labor, $10, indirect materials, $2, and variable manufacturing overhead. So 12 plus 10 plus 2 plus 3. And that's going to give us, how much is it? 22 and 27. So $27 is the variable cost per unit in this specific case. So for every next unit of item, the company will spend $27 of variable costs, specifically for production. Now, here we didn't include variable sales commissions because the question is about produced costs, not produced units, not sold units. B, if 18,000 units are produced, what is the variable cost per unit? Again, it is the same thing. It doesn't matter whether I'm producing 20,000 units, 40,000, well, not 40, the range is 25. So if I'm producing 10, if I'm producing 15, if I'm producing 18, if I'm producing 20, I'm always going to spend 27 per unit. Right? So this is basically it about the per unit cost. Next one is 21 units are produced, 25,000 units are produced. What are the total variable costs? Now here, the story changes. We're talking about the total variable cost, which is this graph right here. So if I'm producing 21,000 units, and I know that the variable cost per unit is 27, so the total is going to change. It's going to be 27 multiplied by 21,000, and that's $567,000. If I'm producing 11,000, and this is the next question, 11,000 units, again, what are the total variable costs? We know that per unit is 27, so the total, how much was it? 11,000 units, and per unit we spent $27, and that's going to be $297,000 in total. So the more you produce, the more it will be. And let me actually try to graph it out for you in the actual graph. So the fixed cost will stay, or rather, let's leave the per unit one alone, and let's just focus on the total one. So if I try to sort of graph it out for you, so it says if we produce, so let's say this is 10,000, this is 20,000, right? So if I'm producing 21, so let's look at the C right here. It says 21,000 units. It's somewhere around here, right? So 21,000. It says we're going to spend 567. So let's assume that this is 100,000. This is 200,000. This is 300,000. This is 400,000. And this is 500,000. So it's something like this. So if I'm producing 21,000, the cost will be somewhere here. Yeah, so 506, so somewhere right here. If I'm producing 11,000, which is somewhere right here, it's going to be 297, which is around, yeah, somewhere around here. So right here. And as you can see it's going to be an increasing line of variable cost, yeah? So something like that.